hello, Maverick traders. This is Rob Reinhold. It is July 13th, Thursday, going into the weekend. And boy, this was just a straight up day. You couldn't have characterized it any differently. So let's take a look at what we're going to talk about in this session. We're going to review today's day. We're going to say what was the meaningful news that moved the day. We're going to take a look at the broad markets. We'll take a look at commodities. Then we will break down the current market analysis. We'll take a look at where we are right now in the waves. We'll take a look at the market internals and also, of course, the sector heat map. And then we'll take all that and we'll look at some trading setups and opportunities for the next couple weeks. Bullish, sideways, bearish, we're always looking for all sorts of trades. So let's get into it. Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply. As I mentioned earlier, it was just a straight up day all day long. It opened higher, it stayed higher, and then it moved higher at the end. Except for the Dow. I think we could say that the Dow was the exception. As you can see here, the Dow was only up 0.1%, well off of its highs. But remember, this is 30 stocks, not that big of a deal. Take a look at the S&P, the Qs, the Russell. They were all up in a monster way. Oil has now broken out of its little range it was in, now trading a little bit higher. Gold had a little up move. But let's talk about the big news of the day. The big news is the PPI. We got the CPI yesterday, and it gave the markets a big sigh of relief. Said the Fed is probably only going to tighten once, maybe twice more, but pretty much the Fed is out of the way. We got the report about PPI that it fell even faster than the CPI, only up 0.1% on both the headline and the core. And when that news came out, the bond yield that was up above 4% just like 3 or 4 days ago, you can see it has plummeted. The 10-year bond is all the way back down into its range below that 3.8% mark, and you can see everything looks very, very tame here. So overall, this is so supportive for stocks. The stock market has had a big run, and it continues to have a big run because these conditions are very, very supportive for stocks. Lower interest rates and a stronger than expected economy. That's why we're getting these moves. As you can see, 71% of all stocks went up today, and we now have 3/4 of the market trading above its 50-day MA. This is a bull market. I mean, all of these things equal bull market. Then we look at the charts, and sure enough, it is showing up in the charts. And you can see here we've got this nice little ascending triangle pattern that we just broke out of on Wednesday. Nice candle to the upside. Nice candle to the upside. You can't say anything other than this is a +3 market. And we've been saying this is a +3 market all the way since the end of May. This is the strongest moves the market could possibly get. Take a look at the Qs. It was out of the gate much earlier. It started its run in the 1st of May. Because it started its run and got a little tired, we had to base here for an entire month. As you can see here, really nice breakout today out of this 1 month ascending triangle. Look, there is nothing in any of these charts that say to not be very long. These charts are telling you this is what you need to do. Here's the heat map. Not a ton of red. You can see greens all over the place, especially large cap tech. Everyone thought large cap tech shouldn't or couldn't keep up. I was one of them. I said, hey, we're going to get a broadening of the market. Well, look, we have had a broadening of the market, but Google, Amazon, Microsoft, Apple, Nvidia are still making new highs every single day. So yes, I guess we can get both. We can get the Qs to rally and we can get a broadening of the market. Ultimately, we haven't changed our outlook whatsoever. We've been at a +3 for a while. We said last weekend in the trading room that this week was likely to be an up week, which it has been. So look, it's a bull market. I don't know what else to say. It's just simply a bull market. You may not like it. You may not want it. But this is it. This is here. So get on board or at least get out of the way, but should be on board already. Well, let's take a look at some potential trades here. Now, I was able to find pretty much endless bullish trades. Now, look, things do look a bit overextended here. I'm not really adding on more bulls. I've already been very bullish for the last 2 months. I've had a very good run. And frankly, I'm actually starting to get to the point where I'm like, okay, maybe I should back off just a bit. I'm not backing off yet, but at least I'm starting to understand, okay, where are we in the waves here? We did just have a 1 month base in the Qs, and we're now breaking out. We had about a 2-week high base in the S&P, and we're now breaking out. So this is not the time to slam on the brakes in this bull market. But as we start to go a little bit higher, I think it makes a little bit of sense to understand where we are in the wave pattern and where we are in the seasonality, where we're getting into this August period, which August is typically a month that just kind of crawls higher a little bit. And then we need to take a look at September and October tend to be the worst months of the year. So I know I want to be flattened out going into September and October, but look, I've got 6 more weeks to enjoy this bullish market here. I have more shorts than longs here because I think the longs are easy. If the market goes up, they'll all go up. I think the shorts are a little bit harder, so I wanted to spend a little bit more time on some potential short positions.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
Let's take a look at this first one. This is Apollo Management Group. This is in the financial sector, and you can see we've had a nice high base over a month of time to consolidate this gain. We got the month and we got the breakout. And yes, yesterday's candle, a little disappointing, gapped up, fell back down, but look at this, gap up and run. There were buyers all day on this thing. I think 85 target. I think that looks good here, but I think you've got to go out into August to get that target on the August monthly options. Next up, sideways. This is Annalee Capital Management, also in the financial sector. You can see ultimately we are pinned between these 2 points, 1870 at the bottom, 21 at the top. The moving average is half flattened out. Everything's flattened out here. I'm looking at a July 20. So this is just going to be a 6-day trade, or I guess an 8-day trade. But really just looking at a 19, 20, 21 butterfly. Just again, we think it's going to stay in this area. It doesn't look like it's running with the rest of the market. So let's just throw on this 20 butterfly here just for a couple of days or just a week here. On the short side, someone has forgotten to tell Foot Locker there's a rally going on. Well, everyone knows that something bad happened here in Foot Locker, and you can see it cannot rally to save its life. And look at this, a down day today, a down day yesterday. Are you kidding me? These last 2 days have been one of the strongest days I've seen in a long time. We went down. If there is any pullback in the market, I think you can easily get down to this 24.50 area. So for me, I like this 24.26 bear call spread. I think that's going to be an easy trade here. Again, this one needs the market to pull back. If the market pulls back, you got some bears here. That's really going to help out your portfolio as you're holding on to your longs. Another one that really same pattern here, Zim Shipping Holding. Came down, just cannot rally. Just cannot rally. Look, it's holding in. Now, I don't want to be as bearish on this one as I was on Foot Locker. Foot Locker, I'm more bearish than this one. As you can see, the recent price action has been creeping higher. It's been creeping a little higher. But take a look at yesterday's candle. Shot up, the sellers came in and sold it down. I think this $13 area is likely going to be a real tough area for this to break. So this is where I really like a 13-14 bear call spread. It's going to be all theta, no delta. If you want to get some delta, you're going to have to go down to this 12. And like I said, I'm just not as bearish on this one as I am on Foot Locker. So I'm going to do something a little bit more -1, sideways to bearish here on this ZIM. Let's talk about tomorrow. Tomorrow's going to be Friday. Fridays have generally been up days over the last 2 months. Every Friday, other than one, has been a nice day where it just opens up and it just moves higher all day long, and then it closes and everyone goes and has a nice party that was long. The markets, again, I'm going to say look a little overextended. I don't want anyone to get too freaked out about that because, like I said, we just did break out of some bases. I'm just saying overall, from where we've gone, you need to understand the NASDAQ is up like 42% this year. Not the NASDAQ, the Qs. At some point, that is going to not stick. There have been years where the Qs have gone up 60%. I think was the best year for the Qs. Maybe this is that year, but look, we just have to understand where we are. The rest of the market looks like it has more legs underneath it. I think you do want to be still cautious of this large cap tech. You can still play it. It's been outperforming, but there are so many other places that are doing okay now. I don't feel like you need to be in large cap tech like you did a month and a half ago, where it was really the only thing that was moving. We do have bank earnings start tomorrow. So JP Morgan, Wells Fargo, Citigroup, they're going to be reporting tomorrow, and they're going to be probably a gap up or a gap down on their news reports. As far as economic reports go, nothing all that important. Import price index, consumer sentiment, you can pretty much ignore those, as this market really doesn't care. Even if bad news comes out, it doesn't care. Well, that is the market roundup. Thank you so much for joining me. Goodbye, everybody.